Revenue-wise, in particular, interesting quarter. You had upside versus guidance based both on some pull forward from Q4 you talked about, also some upfront payments. Normally, we're used to more of a subscription cadence. Explain what happened there.
Yeah, so first off, revenue, earnings, billings, free cash flow all came in above targets. We even upped the guide on all of those numbers. And yeah, we had this little bit of a wobble around the annualized recurring revenue. It's an accounting thing. It's the way ARR is calculated and the way 606 accounting works. But actually, that upfront revenue we talked about, it really is recurring. It just isn't ratable, which means you don't recognize it over 12 quarters. So it takes money out of one quarter and moves it into another. It's all accounting, but the fundamental business economics were solid, and we're getting rewarded for it.
Your software gets used by so many people around the world and companies who are building and designing things. So I often wonder the extent to which we can look into your results for evidence of how bullish or not various geographies are on building for the future. You said in the quarter that infrastructure performs well during downturns, but you didn't say that you necessarily see any signs of one coming. Why are you investing particularly in infrastructure right now? And is there anything that you didn't mention on the call, downturn-wise, that you do see on the horizon?
Well, first off, you see a lot of conversation out there about infrastructure investment and the power of infrastructure investment by various governments. So, you want to be part of that infrastructure conversation. And investing in infrastructure is a long-term play for the company, regardless of what the economic climate's like. But it's also a smart play when people are talking about, are we heading into a downturn? Is the cycle ending? So it's just good business for us to invest in that area, both long-term and short-term. But we're not seeing anything right now in the markets that indicates we're going to see any slowing in our business.
Yeah, Andrew, you just sort of touched on it by mentioning, regardless of the economic environment, given the fact that we did get this pre-Thanksgiving parade of data this morning, a number of Wall Street analysts and strategists coming out and suggesting that maybe we're seeing a bottoming in the slowdown in manufacturing. Is that your read-through through the lens of the company as well?
Yeah, we saw softening in manufacturing early. We've highlighted it in Germany in terms of some of the softness we saw there. We actually saw an improvement in our German manufacturing business quarter over quarter. So, that's consistent with what we're seeing.
You also saw the maintenance to subscription conversion rate up to an all-time high of about 40%. Wonder if you could give some more detail on the mechanics of that. I mean, I know that you'd been raising the maintenance prices, maybe trying to push people into more of a subscription mode, but what other kinds of factors might be increasing that rate, which I guess is a positive for you guys?
Yeah, so our goal is to get every one of those customers on subscription. We think it's better for them. It's better for us. One of the things you're seeing there is we're coming to the end of the program. We had a 2-year program, which was allowing our customers to move from maintenance to subscription and maintain some of their lower prices and lock them in. That program's coming to an end this year, so people are coming forward and moving. There's a 20% price increase sitting out there on maintenance, so people are starting to weigh their options and move more aggressively into the subscription model.
Andrew, I want to get your thoughts on the fact that so many industrial companies are really leaning in on technology these days, whether it's their own software plays or industrial Internet of Things. And I realize for as many companies that I could cite as examples, there are business models and ways that they're going about it right now. But more broadly, this trend we are seeing in the industrial sector right now, does that create more competition for Autodesk, or is that something that could be a tailwind and create more demand?
Yeah, it's a great question. It actually creates a lot more opportunity. One of the things that people don't realize about Autodesk is because historically, over the last 10 years, we've been known as the AutoCAD company. But now, because of Revit and BIM and Inventor and solid modeling and Fusion and what we're doing there, we're the biggest and most important 3D modeling player in the market. And this is where people are investing moving forward. They're investing in BIM. They're investing in new design to manufacturing workflows. They're investing in the cloud, something that Autodesk has been investing in for the last 7 years. So these are all areas where people see productivity enhancements, and they're leaning into them at rates faster than they ever had in the past. And that's a tailwind for us, not a headwind at all. Yeah, there'll be more competition. We embrace that. We want to see more people in the space because it validates where we're going technologically.